This is the Friday, July 17, 2020 version of the Market Plus segment. Joining us now, Don Roose. Don, I know I said it, I think the last time you were here in person. I've gotten used to the computer side of things, to have the human there. So I'm sitting there looking in your eyes all the time, not looking at my notes, which is fine. I have a lot of social questions that came in, so I want to get to those. But you and I talked earlier this week about dairy. We'll get to that in a minute. Let's start with cotton. We discussed weather. You mentioned it in the Southwest. Well, there was some rain in Oklahoma, down through Texas into the Delta, but is this all weather playing in cotton right now?
Well, you know, we have, like a lot of these agricultural markets, one, you're dependent on China or Asia in general. Two, you're dependent on the weather. And the price with weather issues turned out to be less than you would like to believe it could have moved to. So you're right. Texas, for example, they're in the heart of the heat. They raise they have about half of the acres down there. So probably of all the cotton. So probably the big issue is how much the abandonment is going to be. But you know that you're at 50 cents, and you rally up to 63, and now you pull back to 60. So I mean, it's just a market that's just didn't perform to the upside the way you would have liked to hope.
It'd been stuck in a trading range for quite a while. Broke out, still around the 20-day average, but nothing to write home about. Dairy has been rallying. I mean, week after week, it kept going up. There was some consumer discussion on that one. This one finally, is this air coming out of the market slowly, or is there a bigger move ahead?
Well, look at the wheat. We talked about the carries in the market on the grain side, earlier. Look what happened to the milk. I mean, you had these huge bull spreads. You have upfront milk like at $21. You have the back months at 16. So it's all about the upfront. We got too tight upfront. You had the government come in and start buying cheese, artificially pushed us up, pushed milk prices up. But I think if you look at it from a producer standpoint, I think he's fearful that those back months at 15, 16 is what's going to happen. We're going to sink back there again. So we just can't. We did have a little window again. Of course, the best year we had in milk was 2014, and since then it's just been kind of sputtery and a little disappointing.
It's been a well-told story and unfortunate too many times. Let's get to some of these questions that came in via Twitter, Facebook, and we have one from Instagram. We're going to start with Ted, and Ted's got basically an insurance question here. He says, if December corn dies in the 340 area, isn't that the worst thing that can happen to the farmer? He says, would it be better off if it goes to 290?
Well, there gets to be a point where, the government has the best bet, But, yeah, from a producer standpoint, once you're under a certain level, you hope it just goes lower, collect the biggest premium you can. Of course, we had, a 388 price average to set the insurance at, so that, the fall price hopefully would be down into the 290. You don't like to hear that, and you have a chance at collecting some insurance. But we all know if you're talking about insurance, you're talking about really not making a lot of money. You're talking about holding things together.
And it's been tough to try to hold some things together. Beans, I want to get to Troy in Cobb, Wisconsin's question. He's asking about a rally in the bean market. We talked a little about that during the show. He says, what needs to happen in the bean market for a rally? What's the perfect storm look like?
Well, there's probably three things for the perfect storm. One is soybeans are the month of August, so you're still up to bat here. Corn is July. That one is starting to get set. The other thing that we have is, the dollar is weak. It's down about 4% from the top. China is underneath the market demand, so it's going to be China trying to buy soybeans. Then when you look out to our big competitor, they raise 6.5 billion bushels of soybeans. We raise closer to 4, South America. Looks like they're going to expand their acres. Hopefully they get into a weather problem. So I'd say it would be the 1, 2, 3 punch that could happen. And I always say 80% of these markets are weather, so get a good meteorologist.
And hope that they give the forecast that you need. You mentioned the dollar, but that's another question that we got from Paul in Wisconsin via Twitter. He's asking any drop in the U.S. dollar. We've seen a couple of weeks here where it has finished lower. Is the trade agreement any better for our exports of corn to Mexico in the new agreement? So let's talk dollar first. Are we continuing to move lower on this thing, you think?
Well, I think the dollar is, up around 100. It certainly was, tough. We keep printing money, but, the problem is we're printing money, so that deflates our currency like it's doing, but the other countries are doing the same. It was like a world effort that this is the program we're going to do, is print a lot of money, put a lot of money into the consumer hands. So, we're the best of the worst. So that is why the dollar stays strong, in my mind.
We get, I guess, flattery is the most sincere form, because that's what, if we're doing, if the U.S. is doing it, then the other countries will do it. What do you think about the trade agreement? Is it a little too early for USMCA to figure out if there's been any movement or change in grain patterns?
Yeah, I don't think we've seen any really here yet, but remember, it'll affect feeder cattle in a big way because they go back and forth the border. Corn, they're a huge buyer of corn from us, and also pork. So watch those daily export sales is going to be the real key, is what I would say. But, back to the dollar, one other thing is the elections are going to be a huge factor on the elections, who gets in office. So that'll be another thing that I watch for all these markets, actually.
And just from the sake of, will policy continue? Will policy change? There was a discussion a couple of weeks ago. China wants this to happen. No, China wants this to happen. And you start wondering, and you got people to take both sides of those bets. So this one is a little bit of an election question, but not really. Brock in Ohio, which will happen first, $4 corn or back to normal with no mask?
Well, right now you'd say the Mr. Obvious is back to normal with no mask, because we just have big supplies, and basically we're through the crop year already, and we got huge competition from Argentina and Brazil and Ukraine. All those crops look big, and then it looks like you have expansion again in South America.
Again, it's that carry. We had that report last week that really kind of set our feet in pretty solid cement before the weather weekend, when we still have to deal with that major carry out that you're talking about. We mentioned China a little bit. Again, this becomes a political question. Steve in Nebraska's question, Don, is China a player in the future? What's the outlook on China? I mean, seriously, realistically, you talk about pork, where they're still trying to repopulate. We hope they're going to buy some soybeans that are going to feed these animals. But if they have a market that needs our pork, so we could win that way, but they need to fulfill phase one. We don't think phase two is going to happen. Is there something else with China besides those two things?
Well, the tension's very strong, right now between the U.S. and China, so it looks like we're moving further away rather than closer. So how do we get back in the saddle with them? And as far as the pork expansion, you're getting mixed signals out of there. They say that their ag minister said that their production's going to be up 39% on sows in the fourth quarter. Then their statistics person said that their hog herd is down 2.5%, and that they're still at 340 million total hogs versus 445 million at the top. So, you mixed signals out of there, what's going on, and probably real proof is in what they do. So watch the export sales there again for real direction. That's what my advice would be.
And if you buy their economic recovery of 2.5% this last quarter, after some declines, and citing whatever they did in response to the virus. And so what number do you believe? And until you start seeing people moving around and buying, then you can get the sense that maybe that's what's happening. We have a couple of wheat questions. We'll start with Phil in Dresden, Ontario. Wednesday's soft red wheat gained 24 cents, only to lose 15 on Thursday. With soft red wheat supplies higher than usual, do farmers sell off the combine, or do they hold?
Well, what we're seeing people do is, you're up at these big levels that you didn't think you would have. The wheat market is trading a big premium to the corn. So if you have to pay for storage, that would be one that you have to be really careful on. But, we are seeing producers use this as an opportunity or as a point to get some stuff sold.
Another wheat question. This one's very specific, but also I'm very intrigued. We talked about North Dakota last week. I made Dan Huber, Don, be on the North Dakota beat. I'm going to ask you. Jack in Montana asked us via Instagram, is there a bumper crop of spring wheat in North Dakota that we keep hearing about in Montana? He says our elevator keeps telling us to sell our 2019 spring wheat.
Yeah, well, it's a tough one because, if you're 2019, so they're selling last year's wheat crop, and you got another one coming at you. So
They're probably holding for higher prices like
I see,
people
yeah.
do. I mean,
right.
everybody's kind of, what are they telling me when they're calling me? That to me says the other signal, right? I mean, get a little confused.
Yeah, I mean, you got to be a little bit careful. I would say, guard yourself, from a financial standpoint. And if you're paying storage, you certainly have to be a little bit careful with that. But, the wheat market, soft red wheat is telling you that we're a bit mature. The spring wheat, is under the soft red wheat. So, your signal is not a real strong one.
I got 2 questions left. Marty in Nebraska first. Is the cow slaughter really as big as they tell us? Is it due to the dry pasture conditions?
Well, we have, we know that where the heat is down in the Southwest, down in Texas, Oklahoma and stuff. The cow slaughter, I would say, is, I don't think it's huge, but I think we do have that cattle cycle is changing directions overall. But, the cow-calf operator has had a real struggle with financially here, so it's probably picked up a little bit from the feed standpoint.
Yeah, and there's been reports of higher slaughter on Saturday, which is usually a catch-up day, and that's an indication of that they are catching up at the packer. Are you hearing that too?
Yeah, I think we're killing cattle. Our capacity, we think, is about 680,000. That's just all you can do. And we had weeks where we were up at 670,000. So, we're killing cattle pretty aggressively, but we also had a big backup, remember, probably about 900,000 head.
And that took a little while to work through. Last question's kind of a big picture question. Brian in Illinois asked me via Twitter, with the corn and soybean crop well on its way to have a great crop and strong sales, seems that we have found a sort of a bottom. Wood straddles, meaning selling at the money calls and puts in a deferred month. Would that be a good revenue generator, or is it still too early?
Well, what he's really saying is, for people, is he's trying to collect income by selling a strike price below the market and selling a strike price above the market. And remember this, that 73% of the time, roughly, options go off the board worthless when you buy them. But when you sell them, you collect that money. But the one that you're wrong on is a huge detriment. So you have to be really, really careful when you're doing that, and be sure that if the market starts to move against you, move pretty fast. So it's possible, but make sure that you manage them also on a daily basis.
Pick up the phone and call your friendly broker to help you through and manage those types of things.
Management's key.
That is. Don Roose, good to see you. Thank you so much for the discussion.
Thank you.
All right, that'll do it for Market Plus. Next week, we're going to talk about how a loss of limb didn't stop the farm life for a farmer. And we'll also have Mark Gold on as he'll join us to analyze the markets. I'm Paul Yeager. Thank you so very much for watching, listening, or reading. Have a great week.